Vega, we cool. Okay, I can't sit through that whole thing. How's everyone doing? Just here for the intro. I hope everyone's had a good weekend. Nice job on the DD. Thanks. I liked it. GME gonna run 20% this week? You better fucking hope not. Squirt that sweet pickle juice on us. Nice color shirt. Maroon? Yeah, kind of. Why does he hope not? Oh, because I said if it runs 20% this week, I'm banning walk-in. Whatever happened to that day where someone bought into GME and we had a 99.97% pure boof day? It wasn't 99.97% pure boofing. It was it was high, but it wasn't that high. Hold on, what was it? It was 84% pure boofing. That was on October 19th. Sounds like a win-win. Let's do it. I'm not banning you, Popcorn Trader. How's your vacation going? Great DD. Here's the real question. How will I ever sleep again? I don't know. I'm pretty jacked. The like relative liquidity on Upstart dropped 10% on that one candle on Friday. Please explain the skew adjusted gamma chart on Upstart for folks not grinning ear to ear when they look at it. It's the total gamma at each strike, and then it's skewed based on the current price. So if the price rises over like over the gamma flip point, which is really gamma neutral, more accurately it's gamma neutral, then negative gamma becomes positive gamma. Do Wall Street bets just have allergies to embedded YouTube videos and I hold a grudge? I don't know, man. The auto mod takes down anything I try to post there immediately. And then usually those posts are not resurrected by the mods. And it's a pain in the ass too, because they don't allow cross posting. So I have to like format the fucking post specifically for Wall Street bets, separate from anywhere else I post it. And then they just fucking take it down. So it kind of feels like an effort and futility. I'm curious about the state of the put wall on Fubo. Can you go in depth and how you calculate put gamma? What data do I need to verify for myself? I mean, I can pull up the chart for you, but no, I won't do that. Looks like there's still a fairly significant amount of put gamma at $3, $4, and $5 on Fubo. Hold on. There really isn't a gamma flip point because the price is so low. But yeah, if it starts moving up, probably beyond like $3, it's gonna start to pressure that negative gamma. Let me see if I have a calculation for gamma neutral on that. I might. I don't think it has a gamma neutral is kind of the problem. Yeah, it doesn't. It has delta neutral at $3.23. So you could assume that above 323 that gamma would start to move positive. This doesn't even have a gamma max anymore. But it's still intact. I mean, I would expect that we're going to see the same things on Upstart, GME, and Fubo in different quantities whenever there is covering. And even as liquid as Fubo is, it's still really illiquid right now. How do you define the liquidity of a stock? Nope. You can research it and figure out how to do it yourself, but other than that. They were right. We have confirmation. Didn't S3 come out and say that GME doesn't really have any like more? You can't get shorts from anywhere anymore, right? So, was it 400 shares or 400 calls? 400 shares at the top of a market order that was about, I think the whole candle was 11,000 shares, right? Let me take a look. The whole candle was 7,000 shares, but it was a market order that began on the Chicago exchange, and it just blew up the ask. Yeah, the DMM should have stepped in here and done something, or alternatively, the MM, like some liquidity should have been provided before the price gapped up almost 10%, right? That was a big move, a huge move. But if they don't have any shares, right, what are they gonna do? Your PT for Upstart change? What is it? Gamma Max is at 25 right now. 10%, 15% from there. Gamma Max changes, right? It's not a static value. But right now, yeah, that's where my target is. Obviously, you know, if Gamma Max rises and as it rises, that'll change. Will you be streaming Upstart Moass? I don't know if it's gonna, it's not gonna Moass. It's got a lot of potential. I like it a lot. I'm very excited about the position the shorts are in right now. After reading the DD and relieving myself of emotions it caused, sounds overtly sexual. I think if you replace each GME and GameStop reference with Jimmy and Jansquart, it will stand. Oh, I see. I got banned from Reddit for reaching out to the Wall Street Bets mod. It's rough. The weekend's going pretty good, Nicolaire. Thanks. Is Fubo even streaming Mongolian throat singing? Not as far as I'm aware, Popcorn Trader. If not, then I'm selling it open. Sorry to hear that. So the safe play, if we run 10% over GM, but GM has dropped $8 since last week, isn't the GM dropping from deep in the money puts being bought, not calls being sold? So GM really 28 if puts sell off. GM will rise if puts sell off, and also as more and more out of the money calls are bought. Remember, as they drop the price, people are more incentivized to buy closer to the money calls, which brings the gamma max down, right? So, you know, if it's trading at 22 and people are buying, you know, 30s and 35s, that's going to raise gamma max, right? But if it's trading at like 18 and people are buying 20s and 25s, that's going to bring the gamma max down to a lower level, right? So you still have the opinion that we need a run for Upstart first, then for it to come back down and remain on Reg Show to get the explosive run? Not necessarily. I mean, if from a FOMO standpoint, yeah, because people need to pay attention to it, right? But I mean, if that FOMO were to come in now, not necessarily. Yeah, I could just start running. I mean, gamma on Upstart's pretty flat above like $30. And the strikes for like far out of the money calls are already open. So theoretically, you know, a surge of retail buying would raise gamma max very, very rapidly, right? Which would cause the market maker to keep hedging upwards on the stock. Are you gonna sell your GME and go all in on Upstart so you become a billionaire? I don't know about that. Probably not. I don't need to sell my GME to get enough exposure to Upstart to become a billionaire. But I think right now, yeah, I could make a lot off a run right now. I have like 2,600 calls total. I think I have like 500 or 400 on WeBull, and then I have another 1900 1980 on IBKR, or maybe almost 2000. So are you still the opinion that we need to, okay, are you gonna know? Did your PT for Upstart change? What is it? I answered that. Wait, you're the pickle on Reddit that does DD? Yeah, you knew that. I did research it. I've worked definitions for liquidity for stocks and ETFs. I was just wondering how you see it. Oh, no. I missed the 400 share thing. Did that happen on Friday? 400 shares on Friday. Yes. It happened at 12:50 in 0 seconds. Um, the final fill on that order was at $20 for 400 shares on the Chicago exchange. What about that sweet gap from November 2021 on Upstart, 272 to 310? That's pushing it a bit, right? Like, they've changed a lot of rules since GME ran. Like, volatility hedging has been reined in a bit back in February. I'm not saying it can't run hard and that it doesn't have kind of insane potential, but I don't think we'll ever see an event like Gen 2021 again. So while it looks really promising, that's kind of an insane target. Where do you see IV on Upstart going into Monday? It experienced some crush late last week, but that has to change and rapidly, I would think. Thoughts? Probably, yeah. We're still so the next couple days we're looking to see if a FINRA deferral had any effect on OPEX covering, because none of these stocks have gotten any liquidity back, and most of them are really fucking illiquid, right? Things like DDS, GME, Nordstrom's, Macy's, even like Bobby, AMC, like all of these stocks, they need their liquidity event, so shorting can continue, and without it, it won't, right? So yeah, we're just waiting to see when they're going to do that. Obviously the deferral, there's two different ones. You have the Reg T deferrals, which are pretty short. They're about 7 calendar days. And then you have SEC 15C3-3 deferrals, which can be a bit longer. And so my thought is that, back in February of this year, everyone knows about this one. We didn't have an OPEX run, right? And then we had that run in March, which was the first time the F-man cycle on GME had been broken. Well, the first time since January that the F-man cycle had been broken, and this is like a 30-day extension, right? And this was because the settlement fell on the holiday, right? And now what we're looking at is, November 21, we ran into the holiday and immediately dropped off, right? So settlement occurred early. November 2020, which is probably more like this, settlement occurred after the holiday. So we see the volume come in immediately after the holiday. So my thought is that it's a Reg T extension because settlement fell before the holiday, not on it or after it. And so they should have roughly 7 calendar days from November 22nd. So if I don't see settlement by the end of the day on the 29th, I think the 29th, I'm not going to, or I'm going to reposition. I'm not going to continue carrying short dated positions. But we'll see how that pans out. I mean, there's zero transparency from FINRA on how those rules work, or what settlement day is offset till when, or which Rex codes are allowed based on the type of settlement. We know a couple things right now. We know that obligations to XRT were cash settled. XRT was back off reg show as of last week. We know that none of the liquidity has been returned to the basket, which means that there is covering due. And liquidity is extremely low on some of these stocks, GME and XRT especially. Um, and we know that they need to cover that because synthetic shorting has a time limit. You can only do it for so long, and the current volume, due to the low liquidity, is insufficient to roll forward fails through CNS, which means that fails will start compounding. Now, while they don't really care if Upstart hits Reg Show because not a lot of people are interested in it, they cannot allow GME to hit Reg Show at all. Still looking at December on Upstart. I have December calls. I'm gonna move them forward if nothing happens in the next couple days. Uh, Probably to January, um, maybe March. Although March is a bit slim. Was the Upstart DD wrote a Hail Mary of sorts? No. Um, even without all this liquidity potential, let's say, Upstart's still a good company. There's nothing wrong with them. They're a little undervalued right now, I think. They should be trading at a multiple. And if the credit markets stabilize in a higher interest rate environment, Upstart's going to do phenomenally well. They're expanding into automotive, mortgage, and business lending, all of which are more liquid credit environments. Um, and eventually people are going to have to get debt again. It's not like credit's gone forever, right? So while the Fed's raising rates, it's a bit rough on their business model, but I think any return of liquidity into the credit market is going to benefit them greatly. And at their current price, wildly cheap. I mean, the opportunity to get Upstart shares after earnings at $13 is insane. I mean, no matter what valuation model you use, most of them value Upstart probably like around like $40 to $60. And I could see, credit markets stabilizing by Q2 of next year. So the long plays there too. And there's a $250 million share buyback on the table. That's got what, 30 days till the excise tax is imposed. So I think Viking Capital just bought 1 million shares. These prices, Upstart's capable of buying what? Buying back another 13 million shares. So yeah, I'd say I'm pretty fucking bullish on them. Regardless, I don't need a Hail Mary. Can you comment on how market mechanics of Upstart, Fubo, GME, VWAP beyond existing strikes in the options chain? How reg show factors in? I'm trying to understand big guys, DFMU, scramble for locates. Thanks. All right, so you get massive put buying in order to stabilize the price, right? And that starts to when those puts fall off, the market maker begins to rehedge, and that drives up volatility, which attracts call buyers, right? And then with volatility rising, anybody who's short volatility needs to start hedging volatility. And to do that, you need those deep out of the money calls and puts, like on GME, like the $1 strike and the remember the $1 in the 950s and all the volume on those. So that they start using those to hedge their position because they're delta insensitive positions, right? uh and The massive volume getting hedged from those starts to drive even more hedging, which causes even more call buying. Even more call buying causes even more put buying as shorts try to keep the price in check. And that situation kind of just gets out of hand. Here's the biggest problem with it being on reg show while that occurs is that there is no true short mechanism, right? Once the lending pool is tapped, all short mechanisms are synthetic, right? And so when you start failing at T+2 and T+5 for and ETF liquidity respectively, right? And then as risk mounts and the tails diverge more and more, and their tail risk diverges more and more, they become their primes become unwilling to accept that risk, right? And so those fails start to get cleared much faster. And you're also simultaneously trying to short into your own FTD covering. So it's a big fucking mess, right? Yeah, the Fed could bail it out. And that's what drives that volume churn so high. Like that insane volume that we saw through Jan 2021 on GME. That's all options like delta hedging. And if you read the notes about Wolverine, they were the ones that were really in the shit, right? Through that whole period, attempting to hedge all of that options interest. I assume Upstart will not fall much before the run, right? It could. I mean, if they're really in big trouble, they might throw everything they've got at it to try to get a little bit of liquidity at the bottom. Or a big short might try to get out cheap. So, remember Revlon? Revlon back in, what was it? What's this? Is this August? June? Remember this fucking short before it started squeezing? They got it like down to $1. That's something to be careful of. Um, so keep that in mind. That if there is a really big short interest that's in a significant amount of danger, um, they could short really, really hard. Dip before the rip, if you will. What happens if there's no liquidity event and GME beats earnings? Big boom? Could be if institutions buy in. Also, if institutions just recall shares, that could be another catalyst. If volatility shorts benefit from these runs, is it more likely they use the extra week deferral so they could run it on a full week to reach the full potential of the run? That's possible. Yeah, I mean it's beneficial for them to short volatility at the peaks, right? Obviously they want the run to be large because they're hedged for the upside move. Yeah, I could agree with that. Stores are nuts. Don't go shopping. Do stocks instead. Upstart, thanks, Squivora. If Upstart does a MOAS, are you gonna leave us like DFE did? No, I'll just become even more smug. No, XRT going on reg shows bearish because it means they've dodged locate requirements. And so when it goes on reg show, it switches to a different audit. So normally quarterly ETFs are audited by whatever rating agency. So like XRT is an S&P fund, and it would be audited by S&P and to ensure the integrity of their net asset value and net asset basket, right? When they switch to reg show, they're audited by the SEC instead, except the SEC doesn't have a defined parameter for ETF audits. So they audit an ETF the same way they would an equity. And that gives them some wiggle room in their shorting, and they're allowed to overextend their short positions on the ETF that way. So when we see XRT go on to reg show, it gets a surplus of new liquidity that shouldn't exist because no covering occurred, right? And so they get to effectively double down on the ETF, which is irritating. And they don't care because at the end they just cash settle, right? And the losers are, well, anybody who is invested in the ETF long term and indices and underlying assets. White seem like good, brown seem like bad. What's yellow? Neutral. Um, is the only way to truly know FINRA deferral dates is to be an institutional investor with a short position obligations due? Like, is there a representative they have on speed dial? They have compliance officers that handle that, and securities lawyers. Probably extremely specialized securities lawyers. That are far more aware of the timing and obligations than we are. They can also contact and work with FINRA, and FINRA can uh outline what their due dates and their extensions are, and a lot of them are open for interpretation. They can request additional extensions. There's a lot of wiggle room given, so it's very tough for us to pin down on this side, with no information. The key with Upstart long-term potential has to be the housing market flipping to a buyer's market. That's huge in terms of mortgages being purchased. Yeah. Well, also, the auto market's already kind of flipping to a buyer's market, right? As like overstocked inventory that isn't selling off is starting to become cheaper and cheaper. And that'll only compound as, the bullwhip continues to play out into next year, right? And when those massive inventories need sold off, dealers are going to do really good pricing up front, even though you might have a higher interest rate on the loan. But the loan volume, right, the frothiness in the credit markets will pick up. And that's what's really good for them. It doesn't really matter how high the rates are. It just matters that people are getting credit again. So, rates go up, but then the prices of the things that you finance go down. And then that also attracts buyers. You don't necessarily need low rates if you have cheap prices, right? If you're buying a house for $100,000 less than you would have gotten it for last year, what do you care about an extra 3 points on the loan? Thought on HD leap puts, looking at Jan 300, just short an index. It's just better. Gonna be honest with you. Also, HD, I kind of feel bullish about right now. If the market breaks up, HD is gonna fill its gap to the upside. It's got some room to run. Thanks. If I can ask a follow-up question, how does one who is short vol hedge this swaps if they cannot access deep out of the money calls and puts due to all calls being in the money? Oh, that's a problem. That's a problem that got run into multiple times in a row on GME last year. Last year. Do you have an end of year price target for SPX 3800, or do you think we have a Santa rally? Next couple of weeks will determine that. CPI data is going to be a huge factor. Puts are still kind of expensive, although we are starting to see more and more downside leverage building up. So I would say that we're near the top of whatever run the SPX is going to do, but we may not have realized all of it yet. There's still some potential for us to fill that upside gap here. And then there's another gap up here that could potentially fill as well. I mean, you don't even really need to look at the gaps. If this breaks out, that could kind of carry into next year. If we get a breakout through CPI and the Fed pulls back rates a little bit, we could get some more bullishness into the next earnings cycle on the S&P. And I think once we start hitting earnings for Q4 and Q1, those are going to be, forward guidance is going to be significantly pulled back, we've already seen some of that. It's only going to get worse. The valuations that a lot of like big tech is trading at right now are obscene, and their earnings are not in line with that. So if we do run and continue to run through CPI and the next Fed rate decision, I think earnings will be the final nail in the coffin. XRT doesn't really have anything to do with Upstart, right? It's only bots. Yes, XRT doesn't, but it does give us some insight into what they do, because they're so abusive with XRT. We can use it to learn a lot about how they position on other harder to abuse ETFs. MSTR gonna rip or junk? I don't. It just depends on what Bitcoin does, right? Record high car loan default rates also, hold on, Stefan, also turn into lots and lots of used cars for sale, which bloats inventory and drops prices, right? So those cars start getting repossessed, then inventories increase, and then prices across used cars drop, right? So, yes, in the near term, record high default rates are bad, but Upstart's not super exposed to that. Their model helps them actually maintain very low default rates. Do you think March quarterly market puts are still enough theta? Even if I mean, the idea of buying March is that you can move the position. It's much more flexible because you have so much theta. If you need to roll it out, you can, and you can capture that like end of Q2 period, if necessary. I don't know if it would be, but don't forget JPM's got their big fat collar on December 30th. They don't want a hard fast rule for holiday deferment. I understand that. Thoughts on Google price action, just in terms of selling CCs? Bought at 85, but it didn't seem to dip at all the past few weeks when SPX dipped. No, it held. Google has a huge moat. They're a great company. I also own a bunch of shares. Nice cost basis, by the way. I mean, use your delta levels and use that to offset your risk. I don't think Google's gonna rocket in price anytime soon. It's pulled up. It's doing decently, but I don't think if you're selling like 0.1 weeklies, you're going to be at too much risk. It's at like 97 right now. I really don't see it climbing above 104. Maybe like 112. I mean, it's not the best CC stock. I understand that IV on it's fairly low, but it's a great company to own, and I think it's really cheap right now. So, nope, no, I don't want that. Oh, okay. I didn't realize, Stefan. Sorry. Do you think we have a new generation of investors coming in that don't get scared when the market dips, but instead see it as a sale, thus propping up the market, therefore no crash? I mean, I don't know if that's a new generation of investors. We just had a crash, so it's difficult to crash again because everyone's still up that bought in the last crash. Institutional like core positions are still back here, right? Like they still bought a lot back here. They bought big, and they bought big here, and we're still above all of those levels, right? So why would we get a mass panic sell off when everyone's in so cheap, right? The only way I think we see a sell off is when, earnings start to slump and forward guidance gets pulled back really hard. Because then they're not really panic selling though. They're gonna take profit, right? They're gonna be like, oh, these companies are gonna be shit for, the next, and they'll just take profit on their equities. CME BTC futures says December 2020 2022 contract expiring. Should be spicy settlement. Interesting. And AMD Ryzen 7700 have to support the dock. Oh, cool. What's the significance of that GPM collar? It's a huge position, and when they roll it, it has a lot of effect on the SPX. That's about it. Thanks. And more so, the effect is everyone else trying to play the rolling of that huge position. I bought it back to keep my shares. I mean, I guess you could also just kind of take assignment on something like that, right? That's $3 profit a share. It's not terrible. You don't have to hold on to your shares and everything, because then you can just turn around and start selling CSPs, right? If you want to get back in, I mean, you don't have long term holding, right? So what do you give a shit? I know I just figured it was nice to point out these holiday deferment rules. Those are made so that there's ambiguities on purpose. Ambiguity causes justification for non-payment. See, I think the payment's already been made. That's why I have a lot of confidence in the shorter Reg T period. Because I think that the cash settlement's already occurred, and that's why like we see XRT off Reg Show. How do you decide when to cash out on an upstart run with a lot of FOMO? Just volume or price, or do you have a calculation or approximation of gamma max or something different? I mean, I have a calculation of gamma max. I put it on the screen every day. So I target that. I still look at like momentum and volume trends throughout the day to determine a peak. I mean, nobody can tell you how to sell perfectly on the peak every time. It's not gonna happen. Just take fucking profits as you see fit. On Friday's stream, you mentioned that even though the SPX hits the bear trend line, you would still enter about 30% of puts. What type of sign would make you consider entering 80 to 100% of them? I need to see more put leverage. There's not enough leverage to the downside to facilitate large moves. Obviously, I only get updates on that once or twice a day. So, as I see more and more put leverage build up, I'll have more and more confidence that downside hedging will be able to continue once a drop begins. Still looking at far dated 90 DT GME CCs if we get a 20% move. Considering it, yeah. That's why I'm excited, BMG, because I feel like we finally have an opportunity to, through the process of elimination, which is unfortunate, but finally have an opportunity to kind of pin down what deferral they're using in each instance. Like, I'm pretty sure we know what deferral they used for Feb, but it'd be really cool to be able to pin down what deferral they're using now, because all of this in an effort to more accurately predict when these covering events need to occur. And I think we're getting there. I'm really bullish on the data. I'm gonna bring Doric and hopefully JFresh in here in a minute, and we'll kind of discuss some of the things we're seeing in the data. Do you have any predictions on oil and energy companies going forward? I still have BP. I'm still in BTU. I would expect that once we start to see deflation, we'll see the commodities markets heat up, and I'm pretty excited for that. I have some exposure. I think oil still has one pretty good rally left in it. It's been really volatile lately, but yeah, I think before the end of winter we'll probably see one more big solid push in oil. So exposure there is not bad. I still have, you know, Oxy Leaps and shares. I don't have a ton of energy exposure. It's not really my favorite sector, but I have a decent amount. What's up, old school Stevo? What's the risk of selling a synthetic king where the put is deep in the money and the call is out of the money compared to a synthetic, you know, long combo? Out of the money compared to a synthetic long where the call put is out the money. I mean, you really need the fucking price to go up. Margin call, I would imagine, would be the biggest risk in doing that. Also, your chances of early assignments, the deeper you sell the put in the money, are higher. Remember, puts are cash settled, so put collateral is cash, call collateral is shares. So puts have a higher chance of assignment when in the money. So you take on some assignment risk doing that, which could really hurt you. What's it like being not only a stock wizard, but also so ruggedly handsome? Hashtag no homo. Have you read The Richest Man in Babylon? Thinking about snagging it for a fun read. You know, I did, but I don't remember much of it. Um, Also, thank you. And it's only homo if the tips touch. But GM on the screen isn't updated intraday, right? No, you can't update Gamma Max intraday because OI is only reported twice a day. Unless you're a market maker and you have, you know, far more granular data. Or you're physically making the market for the stock. Yeah, you look at momentum and volume to determine. I mean, if you're breaking Gamma Max by like 30%, Gamma Max is obviously going up, right? Can you DM me those two rules again? I can take a look at them when I get home. Another set of eyes on it couldn't hurt. Yeah, I'll do that. See you in the future, Carl. What CSP on BTU is good if you're okay with assignment? I've been selling 24s. I haven't really looked at it this week, but I have some 24s out for December 16th. Jesus Christ, man, it really kind of pumped up. I don't know if I'd want to buy it here. Jesus, hold on. I'm like way the fuck up on this position. How far am I from my price targets? I mean, 30s probably aren't terrible. I think it only has monthly contracts though. Uh, Man, I might buy some more calls here. This is starting to look really fucking good. I'm pretty bullish on their next earnings too, which is on Thursday, Feb 29th or Feb 9th. Huh. I mean, it's riskier in these ranges. You're taking on a pretty big risk trying to target the upside of like $33. I do think it's possible, but make sure you have a lot of theta. The gym in the screen. Okay. Off topic. Sorry. I got a Black Friday code for an unnamed prop firm. Just curious if you have any thoughts on them. Also seems like too good to be true situation. I have no idea what you're talking about. You want to DM me about it, Bob? Hope we get a nice pullback at least before next year. I have some June 3250p and Jan 3700p. They're so far down over 30%. I kind of feel like wrecked quite bad. Theta's gonna save them, right? I mean, you have a lot of theta, so the 3700s you may have to roll. The 3250s, I mean, you just need them to move closer to the money. You don't even need them to go in the money, right? But yeah, you're buying them into a rising market, so you can expect to be underwater for a bit. Richest man in Babylon in a nutshell. Save 10% of what you make and choose wise counsel. Just join the fire movement and save 50%. I guess. Or just make 50%. BTU has weeklies now? Oh, cool. Then yeah, I would sell CSPs like at the money. Still risky though. You're still targeting a multi-year high, but I'd probably wait to enter till the next market drawdown. If the prop firm is regulated, I don't see a problem. There are a lot of prop firms out there. They're all competing with each other for market share, so big discounts can be real. I'd be highly suspicious of anybody offering a fucking Black Friday discount. But up to you. Not a big fan of other people managing my money though. All right, let me see. I'm pretty much caught up on questions. So, let me see if we can get a chat started here. All right.
What's up?
What's up, Dork? Let me make sure. Let's do like an audio test real quick for both of you.
Sure, what's up?
Okay, cool. JFresh is in there. One more time, Dork.
Howdy, howdy. Here I am.
All right, cool. What's up, guys?
Hey, how's it going?
Same old shit, different day.
Yeah. Futures will be open in a few hours. That's exciting, right?
I mean, I guess we'll see what. Yeah, I guess we'll see what happens with those. I'm pretty sure the market just keeps moving up next couple days.
Yeah, I tend to agree. Now that I'm seeing all these people on Wall Street bets drawing a straight line between all the peaks and saying and thinking that this is, some obvious end result is doomed seems doomed to failure for me. I mean, if you look at the lows, it's it's a little bit of a rounded bottom if you think about it. So you
Yeah.
gotta, and nobody's factoring that in. So I think it could push higher. I'm not gonna bet money on it, or not a whole lot of money, but I think it will.
I mean, I've
I'm
got
gonna wait.
my biggest positioning at like 40-50 for SPX, so I'm pretty confident that we'll see those levels soon.
Yeah,
Especially given the amount of just open calls at like 40-50 and 4100. So I feel pretty safe targeting that range.
my plan is to just kind of wait till around like New Year's time / when everybody on WSB gets wrecked buying puts too early, and then I'll start buying puts.
So, well, I mean, I guess this can lead into a conversation about what we really want to talk about, and that this upward pressure on the market is obviously pressuring the liquidity in these vol short and short positions, right? And that's something you guys have spent a lot of time working on over the weekend, and so I figure I'll let you guys weigh in on that and show some bullish graphs, get people's tits jacked.
Oh, you
I
want to go first?
usually always go first, so I was gonna see if you wanted to take a spin.
I mean, yeah, I'll go first because I want to share these charts. You posted some charts. I figured we should just post these charts we came up with because it's a fun development, and it's pretty interesting, especially what you've done. But if I start, it can easily sort of segue into what you did.
Sounds good.
All
Chart
right.
away.
All right, just tell me which one to bring up first.
Just bring up XRT, the dark blue line.
Okay.
We'll just start with that.
The fuck is it?
I mean, yeah, this will be a good one to start with. So I'll explain what we're looking at. This is essentially a calculated liquidity index that JFresh dug up from a paper. That is a formalized way to measure liquidity. So we kind of played around with it, and we got matching results for single securities, which was encouraging. So this blue line is this measured liquidity index,
I don't
and
have
Hold on. I don't
I
see
don't
it on the
have
screen.
chart. Can you just repost it?
one sec.
Whatever you
All
want me
these
to talk
one.
about, just post it in the general, and then because I have to save it and then
Oh shit,
pop
my
it up
bad.
on the screen. No worries.
Yeah, they're all in the general, just like
Yeah,
right
but there's like
above.
9,000 of them. I don't know
What?
which ones.
There's only four. Well, I deleted a bunch of them. Oh, geez.
None of those are
Okay.
XRT.
Yeah. I'll just post them one at a time, and we can talk about them.
Okay, that works.
So they'll all just be year-to-date charts. Just because it kind of the low candle count makes things a little easier to read. So this first chart is okay. There we go. Perfect. I'll just start back over because kind of need to look at it while you do it. And let me just look at this screen. Sorry, you guys. My bad. Kind of a dum-dum.
There we go.
All right, cool. So this first chart is the liquidity index of Upstart. JFresh found this calculation for it, like a decent formalized definition. And basically what this blue line tells you is it's a logarithmic scale, kind of like a Richter scale. So the numbers on the right tell you if you wanted to move the price of the stock theoretically by $1, it would take 10 raised to the power of that number to do so, of dollars. So that's what we're looking at. And the orange line is just kind of like a moving average, a type of moving average on it to kind of help you suss out the major trends.
Yeah.
Um, and because Upstart's volume was so low, this takes into account volume open and high and low. Because the volume was so low and because of that huge spike in price, there was this massive drop off at the end of the chart. So me and Corna both sort of independently calculated what it would be if that weird transaction wasn't there. And it still ended up being a significant drop to a new low year to date. So that was interesting. That could have still been a remnant of the half day, but it's still interesting. So that's that. And then you'll see there's like a side ticker on it. It says XRT. I'll switch it over to bots. And what this does is it divides the two numbers. So the liquidity index of the chosen ticker in the options divided by the liquidity index of the ticker itself. So yeah, so this basically measures how much relative liquidity there is between two securities. So we have bots and Upstart, and it's great. It just moved into greater than 1, which means that bots is harder to move around in price than Upstart by a tiny margin, which is also interesting in itself. It might mean that there's some sort of it could just be that huge artifact, but it might mean that that bots might be leaned on to provide liquidity because there will be less volatility coming out of bots from that movement than Upstart. So that's a promising sign. And then now I'm just going to do charts for the other stock that we love because everyone's going to want to see it. Let's see. All right. This next one is the liquidity index for GME. And then I will compare it with XRT. So we could see the relative liquidity change right here. And you'll see that both GME and Upstart exhibited, more so GME, but they both exhibit this upward behavior where the ETF is more liquid than the underlying. And
Yes.
that is expanding as well. That's an increasing trend, which is interesting. So it's also interesting how there was a swift drop as well on some of the runs in that ratio.
Yeah.
Which the index by itself is somewhat interesting for some reasons more than others, but the ratio itself tells a really interesting story as well. And with that, I would love to pass it over to JFresh because his charts are sweet.
All right.
Yeah, so we've been playing with this liquidity model. And one of the nice things about this particular model is it allows you to, if you have access to the data and can manipulate the data, it allows you to compare the liquidity of the ETF to the liquidity of the entire underlying basket. And that's kind of what I was messing around with for XRT. And so some of this information will be a little bit similar. If you scroll to the first chart that I sent over a little earlier
This
with
one.
the I'm waiting for it to show up on the screen. Yeah, so this just shows what the liquidity is for XRT and then for the entire underlying basket. One of the neat things to show here is that it absolutely shows that the liquidity of ETFs is significantly larger than the liquidity of the underlying basket. So ETFs are definitely, I mean, you're seeing it right here. ETFs are liquidity providers, right? That is a primary function for market makers to utilize these ETFs. And so this is actually a log scale. So it's saying that XRT is about 10 times more liquid than its underlying basket, which is pretty significant. And so then if you go to the next chart, then of course you can see it drops down pretty low because of the half day at the very end there. But if you go to the next chart, so this is the ratio of the unlogarithmized, I guess the index to the 10th power, the ratio of those two.
Yeah.
And so this shows something similar to what Dork was showing for a comparison with a similar basket stock, but this is comparing the liquidity of all of the 97 or so basket stocks in XRT. And we're seeing this very significant, from about the bottom in October, we see this very significant push up in liquidity on XRT to the tune of, I mean, it almost doubled compared to the underlying basket. And what's interesting is if you go and look at XRT's price rise, and you look at the price rise of all the underlying stocks, I mean, I just started going down the list, and like all of these stocks are mooning. I mean, they're all going like 20 to 60% up from their low in October, and GME is just flat. There's a couple other ones that are flat as well, but I'm still trying to play around with looking at some sort of relationship between how heavily shorted or what the underlying liquidity is, and if there's just some indication of why some are running and some aren't. But there are a lot of stocks in this basket that are running right now, so it's just a
matter of time.
Yeah, I mean, liquidity is already kind of pop. The rivers run dry, and liquidity is already kind of popping on this one.
Yep. Well, it's nice to see the data back up the theories that we've had for some time now. So I like that.
So I've been kind of very myopic in the options for like a year now, and
Yeah.
I don't know, something about this weekend. I was just like, I'm gonna dick around with the ETFs a little bit, and this is kind of where I fell first. So we'll see what else I'll come up with as I think about this problem more over the coming months.
Well, it's very exciting, and we would expect a revision in liquidity. These ETFs can't sustain these positions, these illiquid environments forever, right? And so,
I mean, yeah, I love the chart that JFresh put up, that ratio chart. It's just so exciting to me because especially with the bullish price action, it implies that that XRT is really being leaned on to supply this liquidity to the buyers on these underlying stocks.
yeah,
Um, and that just is, you could almost interpret that as obligations being built up on the stocks that don't at least have some sort of proportional movement to the basket in that case.
well, that's also a factor of the rising market too, right? I mean, it's not just that they're leaning on it more heavily as more participants, because shorts are getting squeezed out market wide, as volatility continues to decline and prices continue to rise.
Yeah, and the
If we
proportional drop
define
in
shorts
volatility.
as being long vol, right?
Yeah, and that's the thing, is the drop in volatility is proportional on GME, but how the price action is not, which is also, it's all very, very interesting. And I think it is some sort of, there's some sort of opportunity to arbitrate this action, and I think that's like, in order to resolve these discrepancies, and I think that it's definitely going to be utilized. Whether or not it's a huge pop or not, I'm not exactly sure, but I'm super excited because that ratio is absolutely off trend.
It's fucking insane. um, Especially when you look like the like May and pre-March levels, right? Like before
Oh,
those
definitely.
before those runs on GMA. The levels, I mean, this is to the power of 10, right? It's,
The ratio is, I think it's unitless. Uh,
okay.
but the liquidity itself is to the power of 10.
Sorry, I had a dog and cat emergency. What did I miss?
We're discussing about the significance of the current level ratio of XRT liquidity versus like March and May.
Yeah, this one's really interesting, and I wish I could go back farther, but unfortunately, a
Yeah,
big issue with, and probably one of the reasons why I avoided getting so deep into ETFs for so long, is because you really need a lot of historical data that can be fairly difficult to find. Um, Everybody loves options chains and Greeks and all that, so there's lots of historical databases. But if you want to go and find what are the stocks in the basket and what are their weights every day, that can be difficult.
yeah,
So I only know I know what's in XRT right now, right? And I've extrapolated that back as far as I can go, and there's some stocks in there that simply didn't exist before then, so I get errors.
yeah,
But I would love to go back farther and evaluate this, because my suspicion is that just like volatility is mean reverting, I think liquidity is also a mean reverting measurement. Yeah.
I agree.
Because what was it? It was a Vanguard ETF that was supposed to be a liquidity.
The liquidity ETF that they took down.
Yeah, I think it was finally decommissioned this month.
Yeah. There's Schwab, maybe. There were two. There was Vanguard had one and Schwab had one, yeah. But yeah,
they didn't survive.
Nope.
And they're failing now when liquidity is going silly.
Yeah.
Makes you think.
It looks exciting. It looks like mean reversion needs to occur, so I'm stoked.
Either, I mean, I've looked at like the GME options shade as well, and I don't know, for all I can tell, GME is just completely flat. And I look at like, my estimations of bought and sold calls and puts, and they're all just sort of slowly drifting towards zero, being equally bought and sold. So like the market is finding an equilibrium. And either that means that it will just stay where it's at forever until the end of time, or it won't.
Yeah.
And I really just don't know how to interpret it.
I mean, I would say that sounds like that the market maker is hedging near neutral, right?
Yeah.
In order to facilitate a flip in their hedge as they become, positively exposed to gamma.
Yeah, they're still negatively exposed to gamma, which is good for us when we want to see volatility, but we just haven't seen any. I don't know. I still have my calls open on GME for December.
Yeah, same.
I'll probably close them on Tuesday. I don't know. I haven't decided yet. It kind of depends on what happens. But I think that even if nothing happens, something might happen on earnings, because I just have this feeling that there's going to be something with volatility around this earnings that's going to cause some chaos.
I want to say that they can hold off that long. I don't know if they can. We still don't have an earnings date announced, which is very odd at this point. Especially as we get so close to it. Usually like GME gives us about 2 weeks notice, and we'd want to see something in the next couple days. But I mean, a big run into earnings benefits vol shorts, right? Because they get to short the peak. So
yeah,
and then
sounds
right
good.
right into the IV crush. So
I like this confirmation bias. Let's keep it going.
I mean, this is an opportune time, without a doubt, to run the stock for them if that's their end game.
Yeah, I don't know what their end game is now. I get this feeling, I don't want to. I know I cut you off, Dork. This is the last thing I'm going to say, and then I'll shut up. I really was intrigued by iHor chiming in seemingly out of nowhere to say that there's really no more ammunition left to push down on the stock.
Yeah.
But I think
which we've known for a few days, but
sure, but I think the part that hasn't really been discussed is there's no liquidity for shorts to get out of the stock.
well, then you have to find it, right? And that's kind of why I'm so bullish on Upstart.
ICANN is, how do you say his name? Is it ICANN or Icon? It's like
Icon.
or Pecan.
Carl Icahn.
Huh?
Carl Icahn.
Icahn.
Yeah.
Icahn. Okay, I've heard it always on the media.
He's not a pecan.
He's a pickin'.
Yes.
Got it. I mean, like, the media's talking about how he's way up, right, on his short positions, but who knows, right? Who knows how he averaged in? Who knows how much he's paid in borrow fees over this very long period of time? And who knows how the size of the position? If he's got 5 million shorts, he can't close. He literally cannot close that position without 2 or 3xing the price. I mean,
Yeah,
it's
I
like,
mean, it's actually really hard with FINRA reporting nowadays for a short position, not public reporting, but the reporting done to FINRA for a short position. We probably haven't seen a short position cornered in the market in since Volkswagen. So 2008. And the rules changes and reporting changes since that period have really prevented short positions from being cornered in that same like low liquidity environment way, right? And in that instance, liquidity was obviously manipulated by Porsche, right? But the effect is the same, right? And so the only when a short position is cornered, the only place to unlock liquidity is by giving in to supply and demand, right, and raising prices. And that's like the core of the near term bull thesis on Upstart, right? Is that they've all shorted so fucking hard. The exuberance in the short position was sky high, right? You're shorting down from $400 to $20. It's amazing. But what happens at the bottom when everyone's still in and no one can get out? And now with it on reg show and the supply drying up in the lending pool and the ETFs just not very liquid, right? That's kind of the problem you have on Upstart, is that the ETFs just don't have a lot of liquidity day to day. I mean, they can only really short like 1 million shares from ETFs, and when that delta hedging volume starts to come in, those ETFs become irrelevant very, very fast. So once that turnover kicks up, there's really only so much liquidity you can get every day until they rebalance, right? And I'm not even sure that bots rebalances daily. So, a rising price, unlike GME and IWM in 2021, a rising price on Upstart may not facilitate more liquidity in bots, right? Whereas in IWM, GME very quickly became the highest weighted stock in IWM, and IWM had a massive amount of share ownership, and that opened up a lot of liquidity. But Upstart's not really in that same position, and then additionally, being unable to effectively short it without synthetic liquidity is another problem. And so not only can you not contain the price, but you need to raise the price in order to find sellers. That and Upstart has a $250 million share buyback that gets hit with an excise tax if they complete it after December 31st. And Viking Capital just bought in 1 million shares as well. So there's definitely big buyers already present, and then the shorts need to be buyers in order to get this off reg show in time.
Yeah, and I mean the other thing with ETF liquidity is, there's no way to tell whether or not they can do some sort of direct transaction to get shares of a single stock. I mean, there's always the chance that they have to redeem these and create these shares in kind, which means they have to get a weighted basket of the ETF, and that can get exponentially expensive to supply liquidity that way. And you may not be able to get the liquidity you need from the ETF at that point to just supply liquidity to a single stock.
And while they could use swaps to offset losses and to hedge, swaps do not provide liquidity. And that's something I think we don't really talk about enough publicly. Swaps don't provide liquidity. So the idea that they're using swaps to hide a short position is kind of bullshit. But they can use swaps to offset debt from an underwater short position or to hedge losses on a short position. But they cannot use swaps directly to provide liquidity, although we have tried to figure out some loopholes in which they can use swaps within ETFs against other ETFs and find larger and larger pools of liquidity. But it's very expensive, obviously, and not necessarily reliable in a high volatility environment.
Yeah,
You may
swaps are
not
definitely
find a counterparty, essentially.
yeah, swaps are generally only really beneficial when the outcome is, known enough to a certain set of parameters. Otherwise they fall apart. I mean, you could look back to like 2008 with the total, or what were they called? The I forget, the credit default swaps.
Yeah.
You know how those fell apart on the banks or the
CDFs, yeah.
counterparties. That was that's an example of how swaps can end up, and then and then banks had to get their own swaps to sort of pay for the swaps, and it became a big giant chain of events that just multiplied the amount of money that needed to circulate in order to keep the whole thing propped up.
Yeah.
So, I mean, okay, so Girk, I posted 3 more charts.
Okay.
I kind of yeah, so yeah, these 3 charts, they have to do with GME, but it just kind of gives you an idea of how these liquidity situations have been playing out over time compared to a longer scale.
Okay.
So the first one is because JFresh kind of got me on it because TradingView can go further back, so I figured I'd do this. And it's not a complete representation of the basket, but you could
This
use it as
first
a
one is XRT.
yeah. The first one is the ratio, or yeah, it's the ratio of XRT to GME.
Mm-hmm.
And you could see kind of how the situation has gotten. It's not just up, it's up a ton. These are just the low pass because the signal's so noisy.
Yeah.
But you could see a very clear uptrend that is continuing. They tried to reverse it in March and after March, but it had a quick bounce and is moving up in an uptrend that is really strong.
Yeah, these levels of liquidity hitting levels higher or lower than, during Cohen's buy-in are really kind of intriguing, right? Because we all know what, Cohen's 2 buy-ins precipitated, right? And then obviously they're significantly more at risk now with the lower liquidity environment.
Exactly. And what this says is that it's what it says about how they're utilizing XRT is either they're getting I don't think they're getting better at it necessarily. I don't think the situation is getting better as that ratio gets higher.
Yeah, I agree.
Because the second one is the liquidity index, and so you can see that on GME it's dropping, which means that it takes less and less money to move GME's price around, which is good for shorts. This could be DRS is working or whatever, but
Yeah, I mean that's it seems like this is a pretty obvious effect of DRS. Hold on, let me move this so people can see it.
yeah, like it is a super, I think DRS is working, but it's a two-way street, right? People say
Yeah.
we want volatility, but wanting volatility is a double-edged sword. You could get it, but it could be GME gapping down 1% and gapping up 75 basis points, and that's how they move it around.
Yeah.
Doesn't necessarily mean good for us. But then but the massive drop in it, that means that any covering that they do on the short side is going to lead to more violent swings to the upside.
Yes.
So they have to use less volume.
But also here's kind of the downside to that is that the cheaper it is to move, the less obligations they build, right? So
yeah,
that means that short covering is rarer and rarer. And they can extend their time frames between covering for longer and longer periods of time because simply the number of obligations built up in order to control the price are not nearly as high.
right. And it also means that they'll be able to lean on ETFs more and more, and so they'll have ETFs will start to have a disproportionate effect. The liquidity of ETFs will have a disproportionate effect on these covering cycles as well.
I mean, I think the liquidity in ETFs already has since November really has already shown to be significantly more violent than the any covering on the actual underlying.
Yeah,
like our ETF FTD periods this year have been significantly more pronounced than they were last year. Specifically August was huge, right? I mean the run in August due to ETF FTD covering was significantly higher than like the OPEX, right? Which is crazy.
Yeah, and this, this could bring us to the So the last chart I posted was the liquidity index for XRT.
Oh, okay.
So, and I'll do a zoomed in version as well, to kind of point out sort of another way to look at this and see why it would be that this is happening. And it is because covering the ETF itself, really kind of since the Jan sneeze and heading into it, has been harder and harder to do without causing volatility on the ETF. So changes in shares outstanding on the ETF will cause more volatility on the underlying basket. And that's my running theory right now is that, as ETFs get less liquid, big changes in the shares outstanding or NAV will cause more volatility on the underlying basket as that ETF liquidity goes down.
Okay.
But yeah, so it's been just super low since 2021, and I assume that they try to get liquidity back, and that you could see they did it in November 2021 all the way through the year. Why do I have a timer on? Anyways, sorry about that.
No
So
worries.
yeah, they tried to reverse the trend. You could see since Jan 2021
Yeah.
to get the liquidity back to be able to short like they used to. But it hasn't really worked out too well. But you can see that the liquidity is spiking right now as well, which could imply that they just grabbed a bunch of liquidity from XRT. There's a lot of churn through XRT, liquidity churn. It's an interesting thing, and it should be sort of kept in mind. Does that liquidity, is that used to cover short positions like Jay Fresh was saying? Or is that liquidity going to be used to short the stock?
Well, I think normally, yeah, it's being used to cover short positions, but then, it starts over the period of time as you experience more and more illiquidity, it starts to be used to cover FTDs, right?
Yeah, absolutely. And that's kind of what you see in this most recent trend. Jay Fresh mentioned most of the basket is up really hard right now. You could assume that the liquidity that caused XRT to spike was being used to satisfy those purchases of shares on the underlying, and the fact that it didn't happen on GME kind of creates an implicit liquidity short position on that stock in a way. So, how that can be resolved, probably just through a spike in IV.
Yeah, I
So
mean, they need the market makers to drop their hedges, and they need people to sell.
if I may throw this in there blind, because I'm just curious, one thing I noticed when I was looking at XRT is that they have less than $500,000 in cash, and that seemed low. I don't
That's very low.
remember. I know Turd has historical data on that, I believe,
I
but
could reach out and ask him.
that might be something to circle the wagons on because that seems crazy low.
Yeah, it really does. I mean, they shouldn't have a lot of cash on hand because that it should be being used to. But remember, if these if this liquidity was cash settled, right, and like those forward contracts are closed, and whoever's getting liquidity has settled out as of OPEX, right, then this cash reserve should be bolstered as soon as the FINRA deferral period's over. So that would actually be a great way of seeing, maybe being able to analyze what deferral method is being used.
Yeah, and again, unfortunately, I wish I could get historical data on this, but
I think we could get it from S&P market. It's not cheap. It's
I'm
like,
sure if you want to pay for it, you can get anything, right? But
well, to a degree, not everything, but most things, yeah.
That is interesting. Um, I think that changes in shares outstanding will also be a decent tell of what how the deferral period sort of affected this, because we've there's another chart JFresh made. It's way back in time now. Of the shares outstanding on XRT going up as well, which is a sign of obligations being built up, right? Because the shares outstanding goes up when creation units are made, right?
Yeah.
So, just another here, I'll reply to it and then you can just jump to it on the
Okay.
reply. Here we go. Boom. Yeah, so
Oh
there's
yeah.
a big jump in
I saw
XRT
this one.
shares
Hold on.
outstanding, which is a big indicator as well of,
Oh, yeah.
liquidity behind the scenes needing to be used.
Let me pop this up. There we go.
Yeah, this was bizarre to me. Yeah, so this is just shares outstanding over time for XRT. So now this data is actually really easy to find. It's just like the time series is just in an Excel file on their website. But yeah, there's like this really bizarre, deep and wide dip right here, right as GME dropped and then stayed flat. But it's been going up, and it's been going up quite dramatically, both with the price of XRT and the other components in the XRT basket are also going up. But then there are some notable ones like GME that are just flat.
Yeah.
But I actually looked at the I did what's called a wavelet transform to kind of look at the frequency components over time. That's not really important. What is important, the technicals, what that is important. But what is important is that this dip, the width of the dip and sort of like the consistency of that dip is significant. You
Yeah.
kind of look at the volatility and how quickly things jump around at other points, and then here you just have this really wide sort of consistent structure over the course of multiple months. It's very bizarre. It's statistically bizarre.
Yeah. Exciting.
I don't know what it means.
I mean, it's always been compelling how highly correlated GME and XRT are, given the fact that GME isn't that heavily weighted in XRT, right? Which makes you wonder, like, how much synthetic shareholding actually exists in XRT for specifically GameStop at any given time, and it must be a lot, right? I mean, to offset the pressure of just the rising market and the active fund, but GME has a lot of active fund exposure, and if DMMs are using that these ETFs to get inventory in order to continue to internalize and offset market buy pressure, I mean, they must be using so fucking much. Because like you said, the rest of the stocks are going up, right? GME should be as well. It's
yeah.
Even if just like tangentially, right? It's just even as a sympathy move, GME should be experiencing increases in price, maybe not huge ones, but some. And the fact that it's experiencing not or reverting trend is kind of super bullish, right?
Yeah. And I mean, we know that XRT is historically shorted to heck and back. I mean, and that kind of lends credence to the idea that if you need a creation unit just to short GME, you just borrow 50,000 shares of XRT and do what you need to do, and then and end up having your cake now and paying for it a couple weeks down the road.
Yeah, but that offset settlement is very, very profitable too.
Yeah. Oh yeah. It's the entire kind of thesis behind operational shorting is that you can provide the liquidity in such a way that you're offsetting settlement, not just from T+2, but to like T+5 plus 2 and all these other crazy workarounds to just
T+5 plus 35 plus 3. Ugh.
Yeah, like you get an entire month and a half to figure out what you're going to do. I mean, it's essential to providing liquidity in extreme environments. Like 2020 would have been way worse if we couldn't do that. But
yeah,
but at the same time, it can be abused very easily by an authorized participant who wants to do something like massive volatility shorts on a single security.
Mm-hmm.
So, and it's kind of specific. That reason right there is kind of why XRT has such high short interest, I think, is because vol shorts know that they can get like a slow bleed and volatility going just by
I mean,
shorting the crap out of XRT.
don't forget like the insane amount of short interest in like SPY, QQQ, IWM, right? The big
Oh yeah.
three, right? You know, people don't really like, we don't really discuss how much volatility shorting occurs and liquidity creation occurs in those ETFs, but it's massive, orders and orders of magnitudes larger. I mean, like half of SPY is sold short, which is fucking crazy, right? The size of that fund is huge. If that were to become a contagion, it wouldn't matter where you kept your shares.
Exactly.
But wouldn't that just mean it would explode upwards? We'd have like our first market
Squeeze.
rocket.
Yeah, but then what happens after all squeezes?
Well, I sell out and watch it drop.
I mean, listen, if SPY squeezes and you sell out, and then it drops in the way it would drop if that were to happen, the money that you got at the top wouldn't mean a lot, unless you immediately went and bought water and bullets with it.
Yeah, that's true.
No point in
Yeah.
winning if you end the game, right?
That's the one of the MOAS theses is the idea that the entire market could squeeze because of these sort of mechanisms at play with liquidity, and there's a good amount of credence to it, but the problem is that with the larger funds and even with XRT to I'm sure to an extreme degree, when you do these operational shorting things, you do hedge it's a temporal position, but you do hedge it, either
Yeah.
through a swap of some sort or another position. So you go long the underlying, short the ETF. That's, the classic, but in terms of liquidity, it's essentially the same thing, right? People are
Yeah.
going long the underlying, so you short the ETF.
Yeah.
So
I just love that literally every asset on the planet is in at least one swap. I think about that a lot.
The swap market is huge.
it's the biggest.
Quadrillions.
Yep. Quadrillions. Multiple quadrillions, not just one.
Yeah, maybe even upwards of 50 quadrillion, I think was the upper estimate,
Yeah, I think so.
which is an insane number of
I mean,
dollars.
don't forget that if anything, any contagion like that breaks loose, the SEC and the Fed are going to freeze everything and bail everything out, and the ramifications of it won't be seen. You know, it'll all be dragged out over like 20 years. They'll never let that happen, obviously.
Another
But
weird thing I think about when I think about how much is in swaps, I think about this weird show that was on for a while. It was called something like "What Is America Worth?" and it was hosted by Donald J. Trump, and it was just a really weird show. But if anybody ever finds it, it's kind of interesting to watch him blather on about what stuff is worth.
It's interesting.
well, think of how much real estate value is swapped, right?
Yeah,
I
All of
mean,
it.
yeah, all of it, right?
buy a house, get a swap.
No, not just houses, commercial real estate, farmland. Everything's every inch of ground you're standing on is in a swap.
Yeah, it's crazy. And, you know, what we should also consider too is that in terms of the value of the swap market, that's not saying that like that much money has been created. That's just how many theoretical dollars are in circulation in that market right now.
Yeah.
So, you can't think of it like there's just some dude with 50 quadrillion dollars, or handling all this like just like a stockpile of money. It's all open obligations that comprise this swap market.
Yeah, it's all perceived value, right? There's not actually that much money.
Yeah.
It's still an insane number, though. I mean, I don't
Like
know how you.
if somebody wanted to purchase all of the assets in the world all at once, they'd have a liquidity crisis on their hands.
Well, it's like
Markets and
it's like in the
governments are run
swap
by
market.
attorneys. Precedent reigns, like you said. Everyone's getting bailed out because they will very likely do what they have done in the past. Yeah, that's how it works, right? Everything falls apart, you bail it all out and try again. Boom bust.
Yeah. Then the one time they bailed us out, we caused all these problems with it. You give everyone $800 and stuff goes nuts. I don't know how much people got. I didn't get very much.
You get like if you're on the poor end of the spectrum with no kids, I think the total came out to like close like $2,800 or so.
Yeah, it's not shit.
You're
It's saying
forgetting
like
the
half a month.
unemployment.
Yeah, unemployment and child tax credit pushed that up a ton.
Yeah,
And
unemployment
but I
was
mean,
huge.
yeah, the unemployment one was definitely a big, and especially with a big spike in unemployment, that just tells you how much money was given away to unemployment. I mean, it's I don't want to go down the path of blaming the poors, but there was a market increase in demand and from both individuals and from businesses, which caused inflation to skyrocket. But enough about that. But yeah, the swap market is definitely super interesting, and having to unwind even a small piece of what is essentially, America's GDP being leveraged 50,000 to 1, right?
Yeah,
Uh, is going to be a chaotic mess no matter which way you swing it. And you got to just hope at this point that the swaps and derivatives markets just hold up, because if they don't, it could cause a major financial collapse of an entire nation or two or three or all of them.
yeah.
Well, that got dark. How about GME and Upstart?
Yeah, I'm
Yeah,
still bullish as fuck. So
Carl, you're asking me quite. Is there a price? Is there a special price? No, I have no idea. I look at trends. I don't. I don't. I have no idea. I think there's definitely a level at which shorts have to start giving up, and you'd see it. It kind of happened in like September or August, where the market just kept going, and
yeah,
everyone was just like, "Why? How is this still going?"
I think that's why you saw the realization of OPEX early in August. Not only do we have that insane rise in the market, but the shorts had already begun capitulating in other parts of the basket, which affects the ETFs, right? And then that's then you just see the whole basket run. Kind of like when BBY announced their share buyback on November 3rd. And the entire basket rocketed as they tried to de-risk overnight, right? Um, you know, there's always a potential that those stored obligations can be realized early, like a discharge from a battery.
Yeah, I mean, and in terms of a melt up from the imminent crash from shorts covering, I mean, the way you can kind of there's no way to tell whether or not you're going to call the top or the bottom of something. I mean, you can get close, just with simple resistances and stuff, but in terms of like a melt up before a crash versus say just a steady resolution into a continued bear market versus a move into the bull market, we haven't seen uncertainty in the market peak necessarily yet. We're kind of seeing it, start to peak in the bond market.
Yeah,
But overall, it seems like in terms of the market cycle, we still have not quite gotten to the point where nobody knows what's going on and people don't know what to price things at, which is that's where the market really does start to,
yeah. I
crash.
think we're very like we've been talking about this like melt up since the SPY hit like 3,500, right? But realistically, I think things are still fairly stable. But the market keeps marching higher, and yeah, that period of uncertainty in pricing is approaching faster and faster the more we move up, though.
Yeah, and we still haven't seen the end of year earnings. Q4 earnings I think is going to be a huge catalyst in terms of repricing the market. I mean, right now everyone's just kind of pricing the bond market at a 50 basis point hike. And then, a lot of large institutions are still pricing in rate cuts in 2023,
Yep.
which I think is unlikely. So there's a few things left that can really disrupt pricing in the market, and when they come to bear, it's going to be interesting because the earnings, I think, each earnings cycle that isn't a solid improvement is a more concerning sign, right?
Yeah. Well, especially when, half of the S&P is trading above like a PE of 50
Yeah, that too. Earnings multiples have not compressed,
at
which is
all.
definitely terrifying. Yeah, I mean, and if there's going to be a market crash, like multiple earnings compressions, coming, you'll definitely, yeah, the SPY will definitely rocket up as short positions move to reposition, and things like that. It's really short positions move to reposition, shares are recalled because people are going to want to sell equities also.
Yeah.
So it'll
When
be
I know this, when it comes down, it'll come down fast. No one will see it coming.
Yeah, I mean, you have to factor in too. I mean, the market has been irrationally exuberant for a long time, and it can remain so for
Yes.
much longer than you would expect, right? So we can all sit here and say, well, obviously it's going to start coming down with quarter 4 news, right? But it also just might not. And
No.
then we'll just sit there scratching our heads for another quarter thinking what we were thinking
I
in the
think I
summer.
think I think quarter 4 and quarter 1 combined, we could see a potential market low. But remember, a lot of Q4 earnings are still going to be year over year on last Q4, so a lot of them could be still fairly stable. We've already started to see some stability decline with the last set of like big mega cap earnings, right? With everyone basically missing except Apple, right? But when they have corporations of that size, they have a lot of flexibility in how they deliver their earnings news, and they have a lot of places where they can cut and prop up that valuation for a little bit longer.
yeah.
Yeah,
I mean,
but I also want to push back a little bit on the odds of rates going down. I don't know if they're going to go down or not, but it's really important to recognize that what the Fed is trying to do. I mean, Girk said this many times that a lot of what they're trying to do is ineffective at hurting inflation, or at least the types of inflation that we're experiencing. But also the things that they're doing, the impact of those changes are felt much, much later after the change has been made, and that makes it very difficult to dial things in. So yes, they're being aggressive right now, and it doesn't look like that inflation is really feeling that effect, but it is feeling it. It's just in a very delayed fashion. And so
Yeah.
I think that they're definitely going to be conservative and wait for the effect to be very measurable and notable, and that could be, that could result in them not lowering rates for a while. But I think next year we could see some small amount of rate lowering if we really are hitting the peak on inflation and it starts coming down. Because, I mean, the other side of that coin, if they go too aggressively, they could start a cascade of something that they can't unwind, right?
Yeah.
They could cause a crash, and then they can't unwind these rates fast enough to stop it because there's such a large delay between what they do and how that affects things. So
I
that, I think,
agree.
is why they're going very gingerly, trying to, the soft land. That's what they talk about with the soft landing.
I actually think
Yeah,
because of that, the rate pullbacks will be much faster than the rate increases. I think by end of next year we'll see the Fed probably pull back to like at least the neutral rate.
I don't see them pulling back until they are until the target rate is above inflation, and then they'll probably keep it at inflation as it continues to cool. But I mean, yeah,
But
I
when
bet a lot of
inflation starts to
yeah,
cool,
but
it can cool very, very rapidly.
yeah, I think if they did that, it would be too aggressive, and they would end up just driving the economy into the dirt.
Like we have to presume they're aiming for the soft landing, right? And part of that soft landing, a big part of that soft landing, is pulling back rates at the right time.
Yeah,
not
'cause, I mean,
sustaining a aggressive rate environment.
if you think about how much of a delay there is between their choices and the impact on the market, they really should be starting to decrease rates at the first sign of at the indication that we've reached a peak and are looking like we're just maybe about to start turning down. If they haven't already started turning rates down, then it's already too high, right? Because they've already demonstrated that at that rate it will drive inflation down, right? And so yeah, it's a dance, and I don't know if they're gonna make it. It's like trying to land a plane with a 20-minute delay, right, on every move you make.
Well, it's like what you're doing is you're trying to compress the economy as a whole in order to drive inflation down, and it's a really really risky dance, because you're trying to slow down demand in the labor market, you're trying to slow down consumer demand, but at the same time you're having the effects of like wage inflation and a high demand in the labor market because well, first of all, a bunch of people died over the last couple of years, and boomers are getting older and leaving the job market. So, yeah, we really need to redefine our parameters on how the labor market operates, and there's a lot of other underlying issues that can't really be addressed by the rate increases, and the rate increases just damage the overall economy, right? And so, I'm trying to think of like a good metaphor for this.
I mean, I just like to think of it like inflation can go down for good reasons or bad reasons, right? And the Fed wants to do it with good, for the good reasons, where core inflation's coming down because grocery prices are starting to cool off and things like that, versus inflation going down for the bad reasons, such as corporate spending plummeting because earnings is starting to tank for all these large companies.
I mean,
The bad.
we're already seeing like big amounts of layoffs, which is like something I talked about back in like Q1 and Q2, right? And we're starting to just realize the beginning of that, and that's going to be we're going to start to see more and more and more layoffs, right? And hiring freezes, um, and once the labor market starts to become damaged, I think the Fed needs to pull back rates because otherwise you're going to start to see a lot of big corporate failures, and that's going to be a huge problem. And that if they go too hard, they can plummet us into not a recession but a depression, right?
Yeah, it's a
Yeah,
tough thing.
not to
And
get
I
not to
think at
get
this point,
political,
like the
but
recession is guaranteed, right? But they definitely don't want to push us into a depression. And so
not to get
without pulling
political.
back rates, they definitely would. Go ahead, man. Sorry.
Oh, sorry. I just feel like another interesting potential solution to this issue is something crazy like a wealth tax, where you try to like target who you're taking money and demand away from instead of just hitting everybody with this lower demand output.
Yeah, that'll be hard to affect.
Oh, sure. I mean,
But yeah,
it would be hard to affect in general, and it would be impossible to do in the timeline we need it to be done. But it's an interesting thing to think about.
Possible long-term solution for sure.
yeah,
You
it
know,
would be. It would
because
be.
we'll
I mean,
supply and reduce over aggregate demand, I guess, because the top like 1% do account for quite a bit of demand in the economy.
well, right now the IRS just targets the lowest hanging fruit, right? They don't want to go after anybody who can actually fight them in court because it's just not worth it.
Yeah,
So
I get that.
Well, they tried to tell me I owed them like $3,000 one year, and I sent them a 28-page letter with references to the law highlighted for them, and then a summary of why I owed nothing, and it was closed a few days later.
yeah, the IRS prefers like the guy who doesn't know how to do his taxes, and they're like, "You owe us 15 grand," and he's like, "I guess so."
Yeah.
The great thing was that the facts kept failing on like the 21st page, and so I think I ended up sending like 300 pages total for the IRS.
All right, I'm gonna wrap this up because I got other stuff to do today. Thank you guys for coming on and sharing all that with everyone. I appreciate it.
Absolutely. Have a good one, man.
Yeah, obviously I have a lot to do as well. So
yeah,
have a good one.
I can tell. Later, man. Have a good one.
Right.
Enjoy the rest of your hangover.
Yeah. All right. Bye.
Bye. All right. All right, so that's about it, guys. I'm gonna wrap this up. If you guys have any questions, you can DM me within reason if you can't figure out the answer for yourself. And I will see you all tomorrow morning. Pickle's picks should be out tonight, roughly midnight, maybe a little later. We'll see. Thank you guys. Have a good one.